So we'll start. I have another day, right? I have another day to be completed with you, and we will do the balanced question and answers, right? Next week. Um, and then Mrs. Vivek Fernando will join from not next Sunday, after that Saturday, and then we'll see. Right, where we have stopped last time, I don't know whether we have covered this. To my knowledge, I think we have not covered, but I really just to give you an idea, right? Now, it's a very famous, we call them as, this is as an, BCG matrix. What you call a matrix? If any things we come up with a quadrant, we call them as a basic uh, matrix. Now, this was developed by Boston Consultancy Group, the American University researchers, and they have identified, based on the two factors, market share and market growth, your product portfolio in your organization. Right now, say product portfolio means the products available for market can be put into four quadrants, right? Can be put into four quadrants, and that is basically we are talking about the based on the two criteria, market share and the market growth. Right now, let's look at it. Your products, your own bank's products, maybe credit products, or maybe savings product, whatever product you name it, based on your market share and the market growth, can be plugged into these four units. First, you need to understand that, right? And also, you will see in your question paper, uh, yeah, in your last paper, the T4, um, there is the last page, right? Last page, you see product life cycle, right? Now, PCG and the product life cycle are two strategies you can take for some strategies, decision making, the business level strategic making. Right now, say for an example, your products which are having high market share, right, which are having high market share or high market growth, and high market share are usually considers them as a stars products. Now, star products are like that. Our star products are, we call them as products which can go for more, earn more profits in the future, right? The other products we call them as a high market share but relatively less growth. We put into under cash cow, right? So the products which give you more revenue. Now, for example, in your case, for demand deposits, for example, demand deposits, where you won't pay any interest, no? So demand deposits, savings, overdraft, all that comes under cash cow category, right? So there are some products it won't give you much more profits, not benefit to the organization, and those products we are putting to dog category. The products which we can have a potential to grow in the future, but still not much popular right among in the market. So these products we put into the question marks. Now this BCG matrix, we talk about your product portfolio, having identified the profits and the market share generated from each and every product of your product portfolio can be put into one of these quadrants. The products in your portfolio which have a high market share is going to earn more profits can be put into the stars. The products which are give more benefits to the more profits to the organization can put into the cash. Products can convert to stars, or can go back to dogs, right? Those are question marks, right? There are some products can be future potential product, but certain products which are not give any profit to the organization, but you keep it for sentimental reason, you put into the dogs, right? Now, having understood the type of products which is falling to your quadrants, you can take some decisions, right? Some strategic decisions. Now, that is what we call here hold. Now, you would say hold or build. Suppose if your products comes under star category, you can use strategies to keep the products in its current quadrant. We can keep it there, or maybe invest more money, or maybe sometimes promotion, put some radio advertisement, marketing, so you can convert those stars to cash cow. So that is the strategy we are going to use it, right? Okay, now that is the strategy. Whole strategy means adapt strategies to keep the product in its current quadrant. Invest heavily in advertising promotion for star product in order to maintain its current market share. So you can use the whole in order to protect your market share. The second strategy we call build strategy. So you need to invest money. Now, say for an example, you can use, as I told you, there are some products, very lucrative product, very profitable product, but people are not aware on that particular product in the market, right? But then you invest lot of money to build up this brand. Thereby, we can convert them into stars and cows. So that strategy we call them as the build strategy. Right? If your product in the question marks or problem child, sometime we call, right? If you put that lot of investment, right, to product and can convert them to stars and bill and stars and cash cow, right? The money generating from cash cow can be invested in question marks. So that is what we call build strategy. Right. The next one is harvest strategy, is basically talking reduce investment in product in order to maximize the cash return from the thing. So I mean, no point if your products are in the cash cow, in the dogs, but no point to further investing this money. Right, so therefore you get harvest. Harvest means reduce investment, only you do the maintenance. That also can be applied for cash cow, because while your product at the maturity stage, you don't want to spend more money. So the last, of course, the product is closing the decision with a diverse strategy. So we are trying to eliminating from the product portfolio. Now you see every bank, there must be a product which not give much profits to the organization. So you are not requested to popularize this product. Right now, say for an example, for senior citizen account. So some banks are not much popular, not much encouraged to take, because the senior citizens, that the balance portion of interest need to be getting from government. No, so it is getting delayed. So therefore, nobody is trying to market that product, right? So that's a harvest strategy or divest strategy we use it, right? Now, what I want to tell you here, so depend on your product portfolio box or product portfolio picking to which quadrant, you have to decide a different strategies. Okay, so that is the importance of BCG techniques. Based on your product portfolio, what is BCG mean? I think you have learned somewhere else. BCG mean based on your product portfolio, based on the relative market share and the market growth, divided into 4 quadrants. Question marks, harvest, sorry, question marks, dogs, cash cow and stars. Depend on your position about your product, you can take some different strategies. Okay, right. So from that point onwards, then we have another two type of strategies. We call them as offensive and defensive strategies. So another two type of strategies. Now, offensive strategies are used to build new, stronger market position, create competitive advantage, right? But the defensive strategy means, right, blocks avenue. I mean, used to protect competitive advantage, right? Not lead to creating an advantage, you are protecting. Now, in cricket matches, you will come across the batsman played a forward defensive stroke. Arakshakari pivara kanugamane. What do you mean by that? He's not going to do, he's just protect his wicket like that. So you can use for offensive strategies and defensive strategies to protect your market share, protect your competitive advantage. But there, of course, you're going for offensive strategies. So you come up with new ideas, innovative ideas. You try to compete with competitor. But in the defensive, just to protect from competition. So that is what you call in offensive strategies. You usually attack competition. Right now, say for one of the example for offensive strategies are famous called guerrilla marketing or guerrilla approach. That means hit and run, right? So you are, look at it, you hit and run. That's called the guerrilla, right? And sometimes you call flank attack, just to get an idea, right? Under offensive strategy, we call flank attack. Now, flank attack means you analyze your competitor and you see the weaknesses of that competitor. So you are trying to attack the competitor's weaknesses. So that strategy we call a flank attack, right? Or sometimes we call the Ola call offensive strategy, right? And also sometimes you one other strategy you use for offensive strategy a attack. Frontal attack, FRONTAL. Frontal attack means so you are trying to offer quality product at a low price. So these are the three strategies you can consider under offensive strategies. What are the three strategies under offensive? You are trying to build a new or stronger market position in your existing market, creating competitive advantage. How can you do that? One method is guerrilla approach. So you hit and run. So you are not allowing the competitor to establish hit and run. Guerrilla attacks is right. It's a cortical. Then the next strategy and offensive strategy you can use it. That is called flank attack. FLANK attack. Flank attack means you look at what is the competitive weaknesses. You try to attack on that. So that is a call a flank attack, also a offensive strategies. And the next one means what you call frontal attack, FRONTAL attack. That means you try to offer a good quality product, right? Good quality product at a low price. So those are we call offensive strategies, right? Offensive strategies. And the defensive strategies mean you are not allowing competitor to enter your market, so you protect your competitive advantage, right? So there are two type of strategies we call offensive strategies and defensive strategies. Okay, right. With this small lot, now we are moving to discuss about to number 4, right? T4, which I gave you this time. Let's look at it now. Up to now we discuss how to prepare a strategic plan, what are the steps involving in strategic plan, how we are going to address the strategic plan, and how we are going to measure the successfulness of strategic plan. And also we look at it the what are the strategies we can use for expansion of businesses, right? That is a key aspect we discussed last week, right? Expansion strategies. Then I told you the strategy of expansion is a costly, right? So therefore we need to find it out, right? How are you going to finance for this expansion? So the topics to cover today comes under few headings we call where can business get finance for expansion strategies. So what are the methods available for that? And what are the similarities, differences between equity capital and debt capital? You can fund through equity as well as the debt. So what are the similarities and differences? And then we are going to discuss about what do you mean by financial conglomerate, or sometimes called financial supermarket, financial conglomerate. What is that? And then we are going to discuss little bit of here. After that you can write down if you want. What is BCP, right? Business continuity plan. I told you we need to prepare the three type of plan. One plan is strategic plan, succession plan, and the third compulsory plan is BCP. So what is BCP? And then we are going to discuss little bit of, if time prevail, I am going to discuss some how to analyze your stakeholders. How to analyze your stakeholders. People who are interested about your organization because stakeholders. So how to analyze your stakeholders, right? And then also we are going to discuss little bit of what is product life cycle. Actually, the product cycle is go along with the BCG. Based on your product life cycle, we need to take some decisions, right? Okay, I will explain to you at that time. So you need to add to here topics to cover. You can put B under that BCP. You can write BCP and stakeholder analysis and PLC. So these are the things we are going to cover today, right? Okay, let's look at it now. How the process of raising money, financing, or what is the process? As I told you, the growth is costly and take money to raise. Takes money to raise money also, right? Remember that raising money takes time and may not count by how to initial investors. Right, let's look at it now. How can you finance for your business expansion strategy? Right? Okay, first one is the famous call equity investment. It's a very famous one we call equity investment. So what do you mean by an equity investment? Mean basically we talk about issuing shares in the share market. So there are some advantages and disadvantages of each and every expansion financing methods, right? Equity investment. So that means you are issuing shares. It's a very famous, very common. If you want to improve your capital, if you want fund, right? For you issue shares. So what happens then? The moment you issue shares, your dilutions, right? Your ownership dilution is taking place, right? Okay, that's the first one. You can put number one under equity investment. In the second one, so you may have some profits, right? You earned during the previous year, right? So you can make use of these profits that technically in financially we call them as all these profit as what? Retained profit, right? I think so, where. So you make use of some of the profit you have earned earlier for business expansion purposes. So that is what you call as an internal source of finance. That's the second method, right? You can use it under number two as retained profits. So holding back profits we call retained profits. Right, two methods. Now third methods. Sometimes you can get government grants. Now say for an example, sometimes government will support you some funds or some grants for certain activities, like say with your project or your strategy to improve your businesses, thereby you will contributing to the employment opportunities, and that's you are supporting government endeavors, right? And then you can have it some sort of facilities. That is comes under uh, number 3, right? Okay, can you remember the previous government? They introduced thing called famous one. What you call? We also carried out, all the banks carried out. How you call that concept? One Mr. Form of Finance Minister introduced. Uh, uh, Mr. How you call that? I can't remember the brand name they use it. Can anybody tell me what is the brand name they use it? What is the brand name they use it for last government to give loans to SME loans? Can anybody tell me what is the brand name the previous government, UMP government, was introduced? Mm, now this government, they talk about Saubhagya, that and things like that. But the previous government also introduced some concept. What is that famous concept? I can't remember at the moment. Where Mangala Samaravir has introduced. We also contributed to that, all the banks. Vision something. Okay, that's right. So those are some of the grants. Then the fourth factor, you can use it. We call bank loans. You can obtain bank loans. You put some mortgages, so for you to get the expansion. That is the fourth method, raising money for expansion, right? The next one, a very famous one, we call them as issuing a corporate debenture. Now, I don't want to explain that. Debentures are long-term financial debt instrument. Thereby you introduce to the market to people to buy, and thereby you collecting capital. Now, one times, according to the central bank, every bank need to improve your capital adequacy, but banks have done it. Introduce uh, corporate debentures, right? Debentures is a long term, right? Semi-annual debentures, and you compare to pay interest in semi-annually. There are different type of debentures. Some features, maybe go up to 10 years. Uh, Security or without security, like that. So I don't want to explain much on that. So issuing of debentures also, you can collect some capital. So remember, each and every method of financing have advantages and disadvantages, right? Okay, now up to now we have learned 5 methods of raising finance for strategic initiatives or business expansion purposes. One method is, we call you, first one, equity investment, issuing shares. Third one, make use of your retained profits. Third one, we obtain some government grants. Enterprise Sri Lanka, now I remember. Can you remember about the Enterprise Sri Lanka? That's a government issue. They issue want to start the business and things like that. Then you can take a bank loan, is a mortgage loans, long-term loan. And the fifth one we use is what you call corporate debentures. Right? This is the fifth method. We use corporate debentures. Right. Then there's another one. Right? A new one. What you call ICO. It is similar to, but not much in Sri Lanka, but it's a novel way, right? Remember, ICO, that means initial coin offering. It is similar to IPO. IPO means initial public offering, right? And so it is an initial public offering, what that is IPO, by which a private company go public, sale of stocks, right? IPO like share issuing a shares. But here is a new method, what you call ICO. It is similar to IPO, where the objective is raising funds for a specific business case or a purpose. So investors from anywhere with a bank account or a credit card can take part in ICO. Right? Now remember, so ICO is a sort of a initial coins of a is a cryptocurrency methodology. So that's the new way of raising funds. Now, even though we don't know much on that, but decommitted ICO have managed to raise over after a certain product around 6 billion US dollars for business expansion projects, right? Using really a distribution of cannabis and things. It's a cryptocurrency methodology of like it's similar to IPO, initial public offering, issuing shares, and you can issue ICO, right? And what are the important when you compare with IPO and ICO? So don't ask me much on detail. If you want to get in detail, you just log into uh, your website and see what is ICO. They will explain to you. So there is no shares are issued. So therefore, no dilutions of equity taken place, and no debt because that's not interest, right? And but only thing is you get some returns, ability to reach investors around the world. So you have a wide range of network. Now, through in 2018, US dollars, as I told you, 7 billion was raised. Right, fast execution. So it will decide by the investor. So there are some advantages as this is an electronic form of fundraising. That is what you call ICO. Right? So another method, you just remember there is a methodology called ICO. Right? Like stocks issuing, right? Right. That is the sixth method. Now I will tell you some examples in where the ICO is heavily used in the world. Right? It's a blockchain based thing. Now you see from Travel Block, a company used this method and earned 25 US dollars million. And beyond of grid blockchain mining raised 30, right? And FTV coin, cryptocurrency for the fashion community, lifestyle gum, FTV coin also come up with some uh, money clearing. Only just to need to understand, there is a things called right, and then you need to write another one that is not mentioned in your handout. I suppose I can't talk much. I have some small problem with my teeth, right? The next one you can have it is what you call right. It is there. And number 7, we call blue ocean approach. So I will let me explain what is this blue ocean approach, right? Blue ocean approach. You know what is blue ocean strategy and the red ocean strategy? We discussed little while ago. I mean, last week. What is blue ocean approach and what is red ocean approach? Now, red ocean approach mean basically we are trying to win the market by competing with competitors. Now, the classic example I told you, product differentiations, focus strategy, and cost leadership strategy. What we are trying to beat, we are always trying to beat who? We are trying to beat the competitor by using one of these strategies. Okay, see whether I have that copy right. Okay. Now, if you really look at, I explained to you what is blue ocean strategy, right? So this is red ocean. We are fighting each other. But blue ocean strategy mean I explained to you about the Apple versus Microsoft. Now we are the Microsoft and we are the Apple. So Apple all comes with totally different. Rather than competing competitors, they come up with iPad solution. Right. Now, similar to that, what is money raising methods and the blue ocean's approach is a very famous one. Just listen to me. What is the methodology in fundraising using blue ocean approach? Now you know who is this guy, right? He's the owner of the Tesla Motor Company, right? He's the owner of the Tesla Motor Company. Now he want to basically started with he needs some money. He have an idea or strategy. He want to expand this electric car company strategy. Now Tesla want to manufacture a giga factory manufacturing all these Tesla cars. Okay. Now what do you want? There he's having a strategy of manufacturing our car. So what he need? He need capital to build that Tesla Gigafactory. Yeah, he using to manufacture electric cars. Now, how they generate funds? Now, we look at it not showing shares, not using his retained profit, not getting any governments, not taking any bank loan, not issuing any debentures. What he has done, he totally look at in a different way of fundraising. What he said, he put an advertisement in the website. If you want, anybody want to have a car, that means anybody want to own a car, the electric car in 2 years time, right? Now this guy is famous guy anyhow, right? Remember, he put an advertisement in the web. He said, anybody wants to have a car in 2 years time from my company, please credit maybe around 30,000 US dollars or something. So very reasonable amount. Yeah, you can't buy a car at that price, and you will put it to my account to the Tesla company. So I'll ensure that you are going to get a car within 2 years time. That money I am going to use for manufacture or establish a gigafactory. And that is how he collect the money. So people, because of the trust of that person, lot of people put the money with a return, expecting a car for a reasonable rate. Now, what Tesla has done, it he has manufactured this gigafactory, and that's the amount of cars he can manufacture, and he took the advance, basically money in advance, right? And he had shown this is the car you are going to get it, and put, say for example, 30,000 US dollars or $30,000 to my account. You will get a car like this. The car may be around 60,000 US dollars, for example, right? I'm just telling you. So a lot of people are invested his factory, and finally he has manufactured this Tesla Gigafactory, and he in a position to give all the customers who have remit that money 1.5 years before. I mean, within a 1.5 hours period. He promised to give only after 2 years, but he has given all the people who are remit money credit this to account all these cars. Now you see, he used a totally different approach. He is not going to use the traditional method of raising funds. So that is what you call blue ocean approach of raising funding. This is a classic account. It's a true story, right? It's a true story. So this is how he used the funds for his implementation of his strategy, right? So he's not used the traditional way of doing it. Okay, right. Then you have some companies you need to understand that also. That's what you call crowdfunding, right? So these are new things, right? These are very novel things. So the crowdfunding is a funding a project or venture by a raising small amount of money from a large number of people, maybe typically via the internet. Now, what he's trying to do, and he may use as an intermediary, right, for you as a trustee, and it's like a fund, right? It's like our trust fund, right? Like our fund companies, right? Unit trust companies. So that particular company is collect the small deposits and give it to the project guy who use his business strategy, right? So that is what you call crowdfunding method. The third party we involving in collecting the money, that money is given to particular projects. And the money is generating from that profit will give back again to the small people who are invested their money. So that is another method. So there are, we discussed around 8 type of funding methods, right? 8 type of funding methods if you want to implement your strategies, right? So you need to understand these are new things: crowdfunding, ICO, blue oceans, and issuing shares, issuing using your retained profits, issuing debentures. All methods are there, but there are some other methods also available, right? Okay, let's look at it now. What do you mean by a leverage finance, right? So leverage finance is simply means another approach, funding a company or business unit with more debt than would be considered normal for that company or industry. So if you are using more debt to fund a particular organization strategy or business activity, so that is what you call leverage finance. So that means, so you are having more portions of debt, right? Remember that. So hence the leverage finance is commonly employed to achieve a specific, often temporary objective, make so for acquisition, to buy out or repurchase shares, something like that, right? Okay, so if you want to go for to take over company, you can use it. It's usually leverage finance, right? And then another method we call is examiner's very famous question, leverage buyout process. Now, what do you mean by leverage buyout? Now, suppose an organizations want to take another organization, that is what you call takeovers. Now, you see the takeovers can be hostile and friendly. So, I will explain to you what is the difference between hostile. Now, no question asked at the moment. So they will ask questions. What is merging and acquisition? We learn there are two type of acquisition. One is friendly acquisition. Other one is hostile acquisition, right? So what is the difference between these two? Right? Okay. So we will discuss at the question and answer session. What is the difference between friendly takeover and a hostile takeover? Now, especially under hostile takeover time, so people may want to anyhow. Hostile mean for without getting the concern from the targeted companies, CEO, board of directors, and the management. A third party company want to take over that particular acquire that particular organization. We call hostile takeover, right? ඒගොල්ලෝගේ හරියට මං කිව්වේ කෙනෙක්ව බන්දලා දෙන්න හදනවා අම්මලා තාත්තලා එයා දරුවගේ කැමැත්ත අහන්නේ නැතුව. That is a hostile marriage, right? That is hostile takeover. සමහර ඉන්නේ බලෙන් බන්දලා ගන්නවා, right? But that's called hostile takeover, right? So එයාගේ කැමැත්ත නැතුව බලෙන් බදිනවා. So that is for that purposes also sometimes we use this leverage buyout. So what is leverage buyout? In simply calling that a person is going to take over the particular organization using more credit, we'll call leverage buyout, right? LBO mean leverage buyout. So therefore, especially deal structure where a company is acquired through utilizations of outside financing from bank or another holders, right? So simply call the what is leverage buyout mean using a debt, buying or using a debt and to take over a particular organization company is called leverage buyouts. Right? Remember, so you are using it harriet. If you put it in a very simple to better to understand. Then ඔන්න අපි වෙඩින් එකක් ගන්නවා. දැන් මේ වෙඩින් එක ගන්න පුළුවන් ක්‍රම දෙකක් තියෙනවානේ. එකක් තමයි තමුන්ගේ සල්ලි භාවිතා කරලා. එහෙම නැත්නම් වෙන කෙනෙක්ගේ ණයට අරගෙන වෙඩින් එක ගන්න. So what is LBO mean is like that. වෙන කෙනෙක්ගෙන් සල්ලි ණයට අරගෙන grand වෙඩින් එකක් කරීම අත්පත් කරගැනීම. So that is what you call LBO simply. But then to understand only I've told you what is leverage buyout mean. So using third party loans to purchase or buy a particular targeted company. So that is LBO, leverage buyout. Right. So therefore it is very play an important role on in merging and acquisition, right? For marketing revenues, right? Underprice related to its growth potential, interest in acquiring the company through LP will rise, right? Okay, so that's a simple thing you need to understand, right? Now before that, there is a small thing. Please write this one also. In your questions, you can say what is the difference between leverage buyout? Okay, we will do at the questions, right? At the question answer session, I will explain to you the difference between leverage buyout and management buyout. Okay, I will explain to you at question and answers what is the difference between leverage buyout and management buyout. So leverage buyout mean basically, as I told you, organization is going to acquire another company using external debt, right? But of course, the management buyout mean basically, which involves an entirely new management. Rather than going for another party to buy, so your internal management, internal people going to take over that company is called management buyout, right? Okay, so I will explain to you that later on. Then up to now we have discussed basically 8-9 methods of financing the project, right? So then you can use equity and you can use debt, right? Debt or loans as finance. So what is the difference? Now, if you really compare these two, amount, there is a large amounts available in equity finance because both cases you can, but the moment you issue more shares, your dilutions of stakeholder shares, right? Ownership. So control can be lost due to outside investment, but debt no direct loss in control. Asset used by security for a lot, so you need to have an asset. And comparatively, if you're using equity, Cost wise, very cheap, right? But as far as the debt cost is very high, you have to pay, right, your profits or interest, whether you are earning profit or not. Sometimes for equity finance, you don't want to have a security, but whereas usually for loans, you must have a security. As far as the risk is concerned, you see the equity is less risk, but debt is very high. So just to get an idea, which one you to select based on the characteristics of debt and equity. Right. So sometimes now, apart from earlier, apart from earlier, uh, apart from earlier, mm, debt factoring also can be used as to raise funds. Now, say for an example, now firms, what is debt factoring is talking about. We had two debt factoring to my knowledge. One is LOLC, other one is Sampath, but I don't know whether Sampath is now working, right? But we had two leading debt factoring companies in Sri Lanka. One is LOLC, other one is Sampath. Uh, I don't know about their present position. Right. Now, what is debt factoring mean? Now, when you issue some items for a debt, so they ask for debt period. They may ask for 3 months, 4 months, like that. Right. Now, for that, you need some, but you take some time. Right. They may issue post dated check sometime. Right. You get the money maybe 3 months, 4 months time. So what is debt factoring companies doing? Why look at it, the customer who purchased this, and debt factoring company try to settle those invoices to the particular company at a without waiting for 3 4 months. But for that, he may charge some commission. Now, say for an example, the total debt or value of the debtor's value of maybe 100,000 rupees, for an example. So the debt factoring company give you them 80,000 worth of money, but he get the quick cash. After 3 months, the debt factoring company is collecting the full amount from the debtor, so for 100%. So their margin is 20,000. But one way is the company is good by they getting the money without waiting for 3 months, 4 months. So the debt collections all will take care by the debt factory. So they will charge for fee for that. But you can immediately can raising finance, right? These are some alternative method of raising funds. You know what you mean by now? Debt factory. Other one is, request cash quickly, and that is how they work, right? Then you look at the next one is the leasing. Now we have two type of leasing we noted. That is financial lease and operational lease, right? Now, if you want to use some assets without paying the full cost of the ownership, you can enter into the leasing arrangement. Right? The customer makes payments to the owner of the asset for using it. For financial leasing, usually after you pay for certain period of agreed time, so you will have the ownership of the goods, right? But ownership line with the LLC, but then once you use it, it will come back to you. But the operating leasing is because of the high value, usually ownership is not going to your. right? Okay, the next method is hire purchase also, but it's similar to that. The same way you can use it. And there's another companies which I explained to you earlier. So we call escrow company holds money and documents between parties, and he's but it's a legal concept, and he will keep the instrument and give it to the third party, right? And in between companies are using holds the money and documents between parties as a custodian bank, right? And it is a natural third party, the escrow company, and facilitate buying and selling assets, right? So another concept of uh, business opportunity, right? And third party on behalf of the two other parties, they are in the process of complete the transaction, and there are some companies we looking after that. That's companies we call escrow companies. So escrow company holds the money and documents between parties as a neutral body to facilitate operations activities, right? Okay, so these are some of the methods you can use to basically you can use uh, for raising funds, right? There's an idea, but so far there's no questions asked except for that leverage buyouts. Nothing much asked in this area, but can ask so many questions, right? And then we moving to the concept called financial conglomerate or financial services, right? And just read it. What is financial conglomerate mean? It's popularized in 1980s. Finance companies, they're not only issuing involving in financial businesses, but they are the organization involving in more than one business activity like securities, brokerage, insurance, any other activity other than the banking is called financial conglomerate. Right? An organization involving in more than one activity we call financial conglomerate. Example, organization involving in banking are also involving in securities brokerage, insurance, and other things we call financial conglomerate. Now, this is the first introduced by the USA Citibank, and they with the leading insurance we call Banco Insurance, securities broker Smith Barney. So the Citibank in the world is first used this concept. And what is the strategic intent of financial conglomerate? Create synergies and cross-selling opportunities. That is the strategic intent of financial conglomerate, right? Create synergy. Now you know what you mean by synergy. Synergy means if you are working alone, right? The summation of working together is give more benefit than working alone. That is synergistic effect, right? 1 plus 1 is equal to more than 2. So merger and acquisition, we discuss a lot of synergistic benefits, right? And also with having cross-selling opportunities. That is the main intention of financial conglomerate. Synergies and cross-selling opportunities. Right. So you just go through this point and you see the next one. We discuss what is BCP. Now we are going to discuss about BCP. Now BCP is a business continuity plan. We call BCP is a business continuity plan. comprehensive written plan of action that set out the procedures and system that is necessary to continue or restore the operations of an organization the event of a disaster. Now I'll tell you. Now say for example, your branch is situated in area where subjected to lot of floods. Say it's a branch in Kaduvel area is a low level area that carry the river with a heavy rain were basically underwater. So you cannot do the banking business in your branch. Now, what is the BCP mean if there is any circumstances like that? How quickly you can bring the operations of Kaduvela branch into normal banking operation? That is the plan, the set of the procedure and the system to bring your Kaduvela branch into normal operation activity is called BCP plan. I just give an example, right? Now, classic example. Now, I'm just these days I'm working on this. Now, to what extent, the Sri Lankan banks, to what extent the Sri Lankan banks have used their BCP in COVID-19. So, very classic research if anybody want to do. To what extent the so-called business continuity plan helpful or help for your bank under this COVID-19 case. So the country is locked down. People have no access to go to the branch, not even to the ATM or anything. So how, under such circumstances, right, your bank is work, and thereby you are testing your BCP. How effectiveness about your BCP, right? So therefore, there may be a question on this type because it's a very much important. What extent the organizations now you must have a lot of BCPs, BCP business continuity plans. So one aspect is working at home. So how many of your people are in your banks have that facility? How many people have get used to that? One factor. Working at home, doing some operation business. Second one, to what extent the customers are doing business at home using technological platforms, digital platform. To what extent you have practiced your BCP incorporating digital platforms. One factor is mobile ban. Some of your banks had visited house to house using mobiles. If anybody want to come and withdraw the money, you approach, you involve your mobile vehicles. Right? These are PCPs. Remember, these are BCP. That is why I told you there may be a possibility of asking question. What is BCP? Right? And to what extent the bank apply your BCP in real life situation under COVID-19 situation. Right? For that, the questions comes like that. So you need to explain what is BCP and some of the actions taken by the banks to bring your business into normal. What are the strategies you use? Think your own bank and come up with some ideas. Okay? Right? I hope you understood now. Right? So what is BCP? Right? Clear? Any questions you want to ask? There's some question here. I just see. Right. Enterprise Sri Lanka. I have given, you have given me the answer. but now only I have seen. Okay, now I think you understood what is BCP, right? BC is a comprehensive written plan. So there will be a possibility of asking something like this. And sometimes the examiner may ask you questions like, the revisiting your business model. I will give you a short notes on that. Now, the World Bank also emphasized, now under these circumstances, new normal, so banks has to do it in a different way. You cannot continue with the business operation as it is. So you need to look at it, your business model, revisit your business model, right? So I will have a question on that. Remember, those are the areas. If I am the examiner, I will ask definitely all these areas, right? Okay, so what are the BCP objective then? As I told you, create or document test. Now remember, now the most important thing, lot of organization we have BCP plans. And you are supposed to test all your BCP plans. Sometimes you are tested. But this is an ideal opportunity for you to check your BCP plan credibility. Now, say for an example, I'll just give a simple example with my experience. Now, every bank is having every branch is having a generator. No? Every branch is having a generator, right? Every branch is having a generator. Now you suddenly come across there's some breakdown in Norachol, and we had experienced. No? Suddenly power went off. Then only we see our generator is working. See, we usually supposed to test it during the normal period where the normal national grid power is come to us. We sometimes stop and we request them to switch on your generator to see whether the generator is working, right? And that is testing. That is BCP testing, right? So you are stopped your normal power, national grid power, and request and you start your generator. Then only you know, right? Your generator is working, right? Is a classic example in banks. Then what happened under BCP situation? So once the current went only, you try to switch on your generator. Then you noted that generator is not working. That means your BCP is not tested, right? Remember small things, right? So therefore, remember you need to test your BCP plan. And this is an ideal time. That's why I told you. And this is COVID-19 is an ideal opportunity for to see your credibility of your how effectiveness of your BCP. To what extent you use the BCP in the real life situation, right? So the importance of BCP plan under such circumstances, right? So thereby the organization or the banks who have a good BCP plan, so they went into the customers and helped them, thereby earn the relationship with the customer. The bank has not having all these practices, and the customers get frustrated about that fact, they will move into another bank. Now you see how important the BCP in a situation like that. That is why I told examiner can test you on BCP, how effective is your BCP. You can write with your experience, right? You have initiated a lot of things, mobile vans, working at home, open for a particular period like that. And also you see the cover of things, everything, right? Okay, right. Now we're moving to the another area, right? So thereby we have just covered the entire syllabus. But see some more things if the examiner asks you. So these are the two we call product portfolio analytical techniques. So I think you learn all these things, but just I try to explain to you how you can use certain strategies in a business level, right? In a business level. You know what do you mean by a product lifestyle, product portfolio? Product portfolio means the product and services available with you for marketing purposes, right? Product portfolio, column, right? Now there are two techniques you can use it to take some strategies. The which one PLC is a one technique. What is the other techniques we have learned in the very beginning today? That is called BCG technique, Boston Consultancy Group, right? Same concept. No, your product lives, your product portfolio can be put into the four quadrants based on what your market attractiveness or the market growth and the market share. So you divide into four quadrants. What are the quadrants? Dogs, then problem childs, or question mark, and then the stars and the cash cow. Your product fitting to these quadrant, accordingly you can take some decisions. Harvest, divest, build, like that. Right? Remember the decisions we discussed, right? Harvest, harvest, right? Those are strategies. Similar way, you can use your product life cycle to come up with strategies. That's a simple example. You know, your product portfolios, your products may have in a different life cycle. Product life cycle means every product and services, right? You may have a particular stage, right? Now remember, there may be a 5 stages usually. The red one is the profit and the green one is the sales. Now you look at it, product development. That is the that is the development stage. Like a human being, it is in the embryonic stage. It is in the mother's belly, right? So that is product development. Why we need to develop new product? So after some time, we need to develop new products, right? Once you introduce to the market, it's called at the introductory stage. The product is popularizing is comes under growth stage, and the products at the maturity stage where you get the highest sales and the highest profits, and product in the latter part is going to decline. Now, depend on the stage of your product life cycle. Now, if you compare with your product life cycle with BCG matrix elements, right? Cash cow comes under maturity stage. Then stars can come under growth stage. Dogs comes under decline stage, right? Problem child maybe comes under decline stage as well as the introductory stage. Just for comparison purpose, I told you, right? Right. Now remember, your certain product, suppose your bank having a certain credit product, which is in the maturity stage. Now, examiner asks from you, what type of strategies you can propose for your organization. Now, the examiner asks from you, The product X is a credit product, is a very popular and having higher market share in the product life cycle, or you just say higher earning, higher profits. What strategies you may propose? Right. Now, how can you answer to that question? There you use it your product life cycle concept. You draw the product life cycle concept, and principally you know where your high profits are coming. High profits are usually coming with a high market share, your product at the maturity stage. Would explain. The nature of the maturity stage is the early maturity stage. Only you are getting the higher market share. The latter maturity stage, you know, the products is going to decline. Now, what are the strategies you're expecting? So you need to relaunch your product or extend it your maturity life cycle. So you need to come up with a lot of strategies. Now, say for an example. Now take example like sunlight. Now, what is sunlight? Sunlight been here for maturity for longer period. And they have noted that. So they want to relaunch. They are extending their maturity life period. How they have done it? They come up with new, adding some new varieties. Then sunlight, now sodaki. Then sunlight, now penumaki, now pataki. Samam pichaki, arome vaki, sakura tawai alut megani. Laksne de hari company. Now again they look at it. The people are now moving to use what? Tend to use more washing machines. Aragale gala ready medala sunlight pavita karapu eka. Then adu egedano. Then what? You can't work no. Now you can't. Now what you are doing is put everything to the washing machine. Now what sunlight has done it? So they want to keep that brand name as it is. They come up with what? Sunlight washing powder. So a lot of strategies likewise you need to use it. Like the credit products. This is a classic example in consumer market. But if you take it to the banking life, how can you answer into that question? First you draw this one. So you must aware it's going to come down. So how can you relaunch your credit product? Right? Come up with other features. Now you have a fixed interest rate. But you can come up with now floating interest rate. Adding some insurance cover inbuilt to your product. Fraud protection, mortgage protection, more facilities, cross-selling. So you at the maturity stage. Thereby you can extend it your product life cycle. Otherwise, what happens is the next stage, the product's going to decline. Now you see, based on the product life cycle, you can take so many strategies to improve your businesses and improve your profits. Right? So I just give you some food for thought. Okay, right. Then we move into the final part today and final part of my lecture, right? And I thought of giving you, but so far no question is asked, remember, right? No question is asked. No question is asked, right? Okay, let me explain to you. You need to analyze your stakeholders, right? Stakeholders mean per people you are so people who are having interested about your organization activities, stakeholders. Now, at the very early stage, we discussed a lot of analytical techniques. No, the Michael Porter we used it for, right, to analyze uh, the present competitive nature, right? Like Mendelo matrix, that's the guy who have discovered, right? Recall interest. I told you matrix is four quadrant, and you as an organization, corporate management person, you suppose you are a bank manager, so you need to understand who are your main stakeholders, what are the priorities you need to give them, you need to understand. So how much control they have over the organization. So we need to look at it, the level of power your stakeholders is having. You know, we learn what are the power sources. Maybe positional power, judge, some expert, some political guy, charismatic guy. You know, for customers, different customers are coming to your bank, right? So different monies, lifetime businesses they are bringing to the organization. So you need to understand their power. Based on that, you can put it, yeah, it is called Mandela's matrix. So you think on that. Now, say for an example, first you take minimal effort. So if a customers, if you identify comes under minimal effort, so only thing is, so they will very obedient guys. So your power is less, interest is less, so you don't want to give much more impact to much more attention. Now look at the second guy's keep informed guy. So their power is somewhat high level of interest in the strategy, but lack of sufficient power to influence it. Now you need to understand who are those people. The next guys are keep satisfied comes under that category. Right? Why? Because the power is high, so therefore he can be moving to another bank. So you need to understand them. Then key players like your power also high and your interest also high. Those are the most potential influential in your strategic planning process. And we need to understand the people who are very closely associated with the bank with your preparations of your strategic plan, and you need to understand their importance, the dominant role played by them, right? And just to get an idea how you need to analyze your stakeholders in your preparations of your strategic plan. What are the priority areas, right? Just and get an idea on that, right? So with this small note, so we will come to an end of my area, right? So I think we learn all these things uh, from day one up to now, right? There may be definitely a 1.5 questions will come. Okay, right. So please go through and then you can answer any questions. Right. Now take the question paper I'll give you from today, balance half an hour, and the next entire week we are going to discuss all the questions. We have already discussed some questions, and if you really look at it, my question paper, I think it's with you. All the past papers question was incorporated to this. All the past paper question. And see whether you can answer any questions. Oh, but I also incorporate some question. And this question is consist of 25 small questions. Yeah. 25 MCQs. And yeah, 10 big questions. So all these 10 questions are past paper questions plus my own question, and the areas I think it will come. Right. So please take from today, and the next piece I'm going to discuss all these questions. Clear? I think you are having. Right. So now we have done. Right now, okay, we'll take the question number 6. Question number 6. Part A, question number 6. Okay, now, okay, we'll go from here, from 1 onwards. I can't remember we have done it. Okay, we will see from number 1. Part A, number 1. Right, I think you have the question paper with you, right? Clear? Right, take that first one. What the answer? You see, these are 2000. The first question is 2014 September. And the second question is 2015 September and 2018 March. 3 times the same question asked. Right. A financial conglomerate, I just little while ago I explained to you. What is financial conglomerate? Right? Financial conglomerate is financial institution engaging in more than one business. Banking, insurance, securities business. That is what you call financial conglomerate. Right? Okay? Right. So with the same thing, you look at it. Question number 13. Question number 13. Yeah, question number 13. On the part A, you look at it. This question asks write a small note. One is MCQ. That is appeared in 2017 September and 2018 September. Without giving you to underline, they ask, what is financial conglomerate? Right now you see how many years we had the exam. 2014, right? 2015, 2 exams, right? 3 exams. Okay. 2015, 16, 17, 18, 19, 19. Right? 5 exams. And therefore 2, 10. We had 11 exams. Up to now, we had 11 exams with this new syllabus, right? 11 exams. Now see, this financial conglomerate questions came 1, 2, 3, 5, 6 times. Almost 60% time these questions appear. Right? You see, it's the same question. One time they ask. So, right. So we try to answer that particular question. Okay, I need your support, right? I need your answers, right? What first one I give you? A financial institution engage in banking, insurance, and securities business. That mean an organization involving in more than one organization. So doing the financial services, we call them as a conglomerate. Sometimes the examiner asks from you another name for financial conglomerate is what? Financial supermarket. Another name for that. Okay. Now, if you can answer part A question number 1, then automatically you can answer the question 13, which was appeared in 2018 and 2019 September. Right? Clear? Right? Okay. Then what may be the A2 answer? It's a with strategy. Can anybody? I like to hear your voice, mate. Can anybody? Can anybody put the answer? Chat. Put in me a chat. What may be the answer for second? What may be the answer for second? Part A, question number 2. A financial conglomerate is little bit tricky questions. What may be the answer? It can be a bank. It can be an insurance company. It can be a securities firm. What is financial conglomerate? Mean not one. Therefore, it may be a more than two. So therefore, what may be the correct answer? Answer is D. None of the above. Why? Financial conglomerate mean more than two institutions who are involving in the same financial business. Right? Answer for 2. Right. Now we are discussing the same topic, right? We see it's another question. The question I'll ask you, okay, look at the question number 20. Look at the question number 20. Right. Tell me the answer. Now we have learned today. Can anybody give me the answer? Question number 2. Same topic, same area. I am asking you, what is the strategic intent of financial supermarket model, or what is the strategic intent of financial conglomerate? What may be the correct answer? Can anybody put me the answer? Today we learn, right? We know what is now. These are the 2 type of questions we'll ask, right? Organization is involving in more than one organization, more than 2 financial services, we call financial conglomerate. What is the financial intention or strategic intention or intent of financial conglomerate or financial supermarket model? Can anybody, even I don't mind referring the note and give me the answer? I think overload boring, you know. Tilani, what may be the answer? If you can go through your notes. Right, okay. Gayami, okay. Another one. Gayami said is to create synergies plus another one. Yeah, correct answer is create synergies. What is the other one? Not only create synergies. What is the purpose? Another one, same way, same sentence is there, and cross-selling opportunities. Good. So, what is the main what is the strategic intent of financial supermarket model? One is to create synergies and cross-selling opportunities. You know what is cross-selling, right? Cross-selling means selling yet another financial product to your existing customers. What is upselling? Upselling means, right, you are selling yet another financial products to a customer. You are upgrading your financial offers to your customers. Like now is a classic example from lot of consumer durables companies have initiated, but they started පරණ ෆ්‍රිජ් එක ගෙනල්ලා දීලා අලුත් ෆ්‍රිජ් එකක් ගෙනියන්න. right? ඉතින් ඒක අපිටත් කරන්න පුළුවන් නම් හොඳයි නේද? පරණ ඒවා දීලා අලුත් ඒවා ගන්න. ඉතින් ඒවා only for physical products is happening, right? Okay, so what is the reason? What are the upselling mean? So even for weekend, we will give top up loans, no? Now during these times low interest rate, we will call all our existing credit customers, ask them to put them another loan, right? So this is top up loans, we call them as upselling to some extent, right? Okay, now you understood, I suppose, how to answer, right? Then we move into the question. Now we have learned everything, right? I can go now. Question number three, and that question is 2016 September, all past question. That means if you can answer these questions, you pass the exam, right? Company expansion is possible. So basically they talk about what are the business expansion strategies. So they have mentioned, now is a very simple, at least you know the one expansion method. You in a position to answer the question. Okay, right? Tell me now, Patu, what may be the correct answer? Simple. Now you don't want to have much knowledge to answer to this. I am this randomly checking, but don't worry, right? Don't leave now, right? When I ask question, Patu, what may be the answer for question number 3? A company expansion is possible through, this is 2016 September. Now you at least you know two, then you know what's the answer, no? What are the methods available? What may be the answer? Any volunteer? Question number 3, a company expansion is possible through, I didn't see you, right? D. Why D? Because you can expand this acquisition, right? Then merging also possible, no? We call merging and acquisition. If A be correct, then if you don't know C, don't worry. So you can go for any of the above. The answer is D, right? This is how you select the answers, right? Clear? So you know exactly acquisition and merging are the two methods available for business expansion. So that means even though you don't know group, right, you can go for D. Any of the above. Group also can be expanded. Now you look at it in businesses, right? Now these days, the all banks are publishing their half-yearly annual statement in the newspapers. No, now you see they put banks and the group. Why the group put? Because bank is expanded. That's group mean they're having some more businesses other than the banking. Right now, say for an example, some subsidiaries they may have in, like Sampat is having Sanghinda, like that. Okay, so group. So group of companies. So therefore group also you can expand. So answer for 3 is therefore D. Right, now 4. Question number 4. Which one of the following 2019 September? Which one of the following provides the answer for the question on where does the organization aspire to be in the future? As simple as that. What is the key? Which give you directions where your organizations to go, but it is not the final destination. I told you it's like a lighthouse. Lighthouse is not the final destination. It's give you directions to go. So therefore the answer for 4 is simply as vision statement. Okay, I think I have done the 5 also, right? It's for another company use a specific form of its intellectual property. They call licensing, right? Okay, then so okay, question number 6. We'll go for this question. So we learned today itself Leverage finance mean, what is leverage finance? Right, this is my question, right? I have given what is the leverage finance mean. What will be the answer? I need support from you all, right? Then not Libby is active, right? Tell me. So I got lot of answers from Gayumi. Why not Madhushan? Right, Gayumi also given me the correct answer. How about Madhushan? What may be the correct answer? Gayumi has given the correct answer, but what is Madhuni? Madhushan, no? Madhushan? What may be the correct answer? Right? Is the first one again. A, funding a company or business unit with one more debt than would be considered normal for that company or industry. If you take the organization having more debt, you are not supposed to have usually, it's called leverage finance. Right. 7, special strength that gives an organization a competitive advantage is, what are the competitive advantage you are getting? Through your core competency. Core competency. Now, what do you mean by what do you mean by a competency? That is your organization knowledge, your skills, and your attributes and attitudes. Those are key components. If your organization employees are having all these things, right, you can have a competitive advantage. You cannot compare your bank staff with another staff, right? Your staff knowledge, your attitude, the way you behave, all are called competencies, right? Your technical knowledge, your conceptual knowledge, skills, your human skills, your product knowledge, your competitor knowledge, your industry knowledge, your marketing knowledge, your customers knowledge, all are core competencies, right? Okay, right. Now, question number 8 is 2016 March. Can you answer to that? 2016 March. 2016 March. Question number 8. What may be the answer? Question number 8, 2016 March. What may be the answer? Can anybody put the answer? Question number 8 is a past question, 16 March. This question is 2016 March. What may be the answer? Anybody can put? Leverage ratio. Leverage mean your composition against between debt to capital. So then what may be the answer? So you don't want to know the entire answer to answer the question. That is the important thing, right? That is why, suppose if you don't know what is intermediation, so you don't worry. Why is not worry? Because you know the leverage, always you look at it, the ratio between equity or capital to debt. So A given capital, B7 borrowing. So therefore, if you don't want to know the intermediate level, then the answer should be all about D. Right? Remember, if you have a doubt in C, but you know definitely AB, leverage ratio means the ratio between the debt to equity. Debt means borrowing, equity means capital. So therefore, answer is all of the above. Right. Now, question 9 is my question. Right, is my model answer question. So what is the incorrect statement with regard to KPI? Incorrect statement. What is the incorrect statement? Incorrect statement is basically wrong one. KPI can be a numeric number or ratio. Yes, no, it's usually KPI we go for basically for numeric number, right? Then A, KPI may often reflect relevant industry standards or benchmark. Correct. We always compare either industry or benchmark. A also correct. Then it's line between B and C. What is B? Different organization will have different performance indicator. Yeah, because you cannot measure the same way the banks and the manufacturing company. The two different ways. So therefore, different organization will have a different KPI methods. So key performance indicator is a qualitative and quantitative measure. Both can do, but more or less KPIs are relatively for quantitative in nature. So therefore, answer is C. Right. So now we I think we have learned some. Now you can answer to question number 15 also, right? Question number 15. What is the 15 question? What is the mean by leverage buyout? You know what is the answer? When a company is purchased by another within a significant amount of borrowed money is called leverage buyout. මතකයි නේද? අර වෙඩින් එක මතක තියාගන්න. ණයට අරන් වෙඩින් එක ගන්නවා. Leverage buyout. Right? වැඩිපුර ණයට අරගෙන මිලදී ගැනීමට අපි කියනවා leverage buyout. Right. Criteria for a subsidiary mean. What do you mean by a subsidiary? Now we have a lot of subsidiaries, right? I told you about Sampath also have a subsidiary called Sampath. What's the Sampath company? The finance company. Now subsidiary is a company with voting shares more than 50%. That is a subsidiary. Subsidiary is a company with voting shares that is more than 50%, controlled by another company is called a subsidiary. Right? Okay, so any company, their voting shares is controlled by more than 50% by another party, and that company has become a subsidiary. Right? Okay. Right. Right. Now you can answer to question number 23 also. Right? What is BCP? Right? Business BCP. Also you can answer to that question. Right? Okay. So now we move into part B. Right? Part B. Now I'll give you a separate one. Please write, because I thought examiner can give this question, right? Okay. Now sometimes. Now you know we learn acquisitions. No, we learn acquisition, and under acquisition we learn acquisition can be taken place two ways. What are the two methods? Friendly takeover and hostile takeover. Now we try to answer to that question, right? You write under part B 7. Now briefly explain the difference between each of the following pairs. Now there's a question is coming definitely similar to this, and we have learned strategic planning versus succession planning, merging and acquisition, sort and pestle. Right, like that you put another one, friendly takeover and hostile takeover. I try to explain to that. Friendly takeover and hostile takeover. What is the difference between these two? Right, you can write. Right, you can write under that. Column difference between a friendly and hostile takeover. Difference, the main difference between what criteria? The difference between a friendly and hostile takeover is solely in the manner, in solely SOLELY, in the manner in which the company's takeover. ඒ company මිලදී ගන්න ආකාරය අනුව තමයි මේක ප්‍රධාන වශයෙන් වෙන් කරන්නේ. The manner in which they take over the company, you can differentiate friendly and hostile. Now say friendly takeover mean, right? What do you mean friendly takeover mean? The target company's management. Now target companies mean the company is going to acquire, right? The target company's management and board of directors agreeing. Management and board of directors agreeing to be absorbed by an acquiring company. Right now, mama කියලා තියෙනවා example එක. What is friendly takeover කියන්නේ කැමැත්ත අනුව දෙන්නගේ විවාහය සිදුවීම. එතකොටම දෙපැත්තම කැමති. කවුද? දැන් ඔයා අපි තුමු ලේඩි කෙනෙක් කියලා. දැන් බොයි ලගේ ගෙවල් පැත්ත නැත්නම් බොයි නැත්නම් ඊළඟ ගෙවල් පැත්ත ගර්ල්ගේ දෙමෝපියන්ගේ ආශිර්වාදය කැමැත්ත අනුව විවාහ වීම. Friendly takeover. Right? So that is a friendly takeover. The target company තමයි wife. උදාහරණයක් ගත්තා. මම මේක මතකෙ ඉඳි කියන්නේ. Don't misunderstand. Target company is your wife. Their management and board of directors. අම්මා තාත්තා එයා සහ ගෙදර කට්ටිය සානෑදෑයෝ agreeing to be absorbed. ඔගොල්ලෝ ඔක්කොම කැමති husband acquiring company, absorbed by an acquiring company. Hostile approach. Under hostile takeover, the management and the board of directors of the targeted company, right? Management and the board of directors of the target company oppose the intended takeover. Viruddhai. Oppose, OPPOSE, the intended takeover. Viruddhai. Oppose the intended takeover. Right? Oppose the intended takeover. Right? Another difference. Right? Difference. Now, say for an example, I just want to tell you this also. Now, how hostile take over that company, under hostile takeover, how that organization is taking over that company. How can you do? There are three methods available. There are largely two. One is we call them as tender offer. Right. Now say, just listen to me, right? Tender offer. Now say A and B. A company is an acquiring company. Targeted company is B. A tamai B ganne යන්නේ. එතකොට A කොහොමද B ගන්න යන්නේ? B කැමති නැහැ. හැබැයි B ගත්පත් කරගන්න යනවා. එතකොට A කොහොමද B ව ගන්න යන්නේ? How is going to take over the B? A has three options. What is the option? Now, who is opposing now? Board of directors and the management. Actually, in the කට්ටිය යකමැති. Now, what A is offering premium price to the stakeholders, shareholders. Management board එකේ නැති shareholders like නෝනේ. shareholder අපි තුමු දැන් company එකේ value එක අපි තුමු billion එකයි. company billion දෙකක් offer කරනවා shareholders ලා. එතකොට මොකද කරන්නේ? shareholdersලා කැමති වෙන්නේ නැද්ද? එකයි වටිනාකම දෙකකට යන්න හදනවා. So they are expecting a higher return. So even though with the disagreement with the management and the board of directors, the other shareholders willing to sell their shares. So that is what you call tender offer. So tender offer එක high value එකක් දාලා තමයි කරන්නේ. Second method. එතකොට second method එක විතම ඒත් කැමති නැහැ කියලා ඒගොල්ලෝ ගන්න, but anyhow we want to take share value. ඔන්න කවුරුත් කැමති නැහැ, වැඩි ගාණක් දෙනවා. ඊට පස්සේ එක තමයි proxy-fight, PROXY-FIGHT, proxy-fight. දැන් මේවා හරියට මේ සාමාන්‍යයෙන් විහාර කේස් වල තියෙනවනේ. proxy-fight කියන්නේ, now just listen to me, what is proxy-fight? This is how they're going to take over. B ව A ගන්න යන විදිහට මම මේ කියන්නේ. එකක් තමයි shareholdersට වැඩි offer එකක් දීලා. ඒකට කියනවා අපි tender offer. Second එක තමයි proxy fights. Then ඒකෙදී ඔයගොල්ලෝ දන්නවද famous කරන්නේ මෙහෙමයි. ඔක්කොම shareholders ළඟට යන්නේ නැහැ. You know, there are some major shareholders in the company B. We are having a large portion of shares. Now, A company approach all these B companies' large shareholders. වැඩිපුර shares දෙන කට්ටිය හම්බෙලා ඒගොල්ලන්ට offer කරනවා වැඩි rate. හරියට right? දැන් ඔන්න ගෙදර කචල් නම් අයියා කචා. අම්මා කචා. හැබැයි ඉතින් මෙයා මොකද කරන්නේ යන්නේ? පුතා අල්ල ගන්නවා තාත්තා. තාත්තට දිශේ එකක් තියෙනවා. තාත්තා පොඩ්ඩක් ඩ්‍රින්ක් එකට බරනවා. නංගි වල්ල ගන්නවා. තාත්තට දැන් ගෙදර දෙන්නේ. මේජර් ෂෙයාර්හෝල්ඩර්ස්ලා දෙන්නේ අල්ල ගන්නවා. අර ගන්න හොරි වෙන්නේ. එතකොට තාත්තා බල කරනවා මදින්න කියලා. මොකද අර මදින පුද්ගලයා තාත්තවයි නංගිවයි මල්ලිවයි අල්ලගෙන තියනවා වැඩි ගාණක් දීලා. That is called proxy fight. Similar way. Right? Similar way. Third method, sometimes we call them as creeping method. Now, creeping offer means basically at the stock market, the company is going to buy at a higher rate at the stock market. But in Sri Lanka, especially the finance businesses, they have limited to have the major shares. But that is the three methods, right? So this is how usually the highlighted. Now, I think last week we discussed what are the strategies available for hostile buyer, hostile company, or the targeted company to prevent taken by hostile person. ඒ කියන්නේ අර බලෙන් බන්ධනෙක් කෙනාට විරුද්ධ යන්න B කම්පැනියට තියෙන්නේ මොනවද? We discussed poison pill strategy. Right? So we discussed last time. There are some strategies available. One is poison pill strategy, green set මැදින්න. එයා බදින්න මම හොඳ දන්න කෙනෙක් බදින්න, හොඳම එක්කෙනෙක් බදින්න ආදී වශයෙන්. Right. Now, just to get an idea, if there's any question only, you need to answer of these things. Now, can you tell me example for friendly takeover in the world? It's a very famous one in 2000. Friendly takeover, right? Friendly takeover in the world. You must be knowing in 2014, Facebook company acquired anybody knows what's the company they acquired? WhatsApp for $19 billion. But the friendly in such a manner, right? And okay, and WhatsApp go along like that, and they was given independently to work, right? So that's a friendly takeover by Facebook company taken over WhatsApp, right? But ownership is there, but they are working alone. They have given the freedom to work as WhatsApp, right? That is a famous friendly takeover. Now these days, there's a hostile takeover is taking place. Can anybody tell me these uh, these days what is the famous hostile takeover negotiations are taking place? What is that? Huh? America, maybe due to legal aspects also. What is the famous case? These days, Microsoft versus what is that? Huh? The guy is the owner of that particular uh, that video apps called ByteDance. Dance. ByteDance can account. Who is the who is what is he is having now? Famous one. India is very famous. TikTok, very good, very good, very good. Manisha, correct. TikTok. Now these days there will be negotiations going on. Microsoft with TikTok, right? So that is the hostile takeover sometime, right? Because the America said before September, if you are not given to my Microsoft, we are going to ban. Right? In the Microsoft also want to get in India is very famous, right? This TikTok is very famous in India. Is around 650 million are using TikTok in India. It's a huge market. Now Microsoft want India also. Right now there's a negotiation is going on. That these are the things you need to know, right? These are things, something is happening in the world, right? These are something in the things are happening in the world you need to remember, right? So time is 12:30, so we stop today, and we may discuss all these 10 questions possibly, right? And please, I humbly request from you, please go through your notes and try to answer for next week. If necessary, I can take another day, end of next month, right? There may be a 3 weeks will take up by 2 to 3 weeks take up by Dr. Sridharan and Mrs. Vivat Fernando. But then they told me there's maybe a 1 week I can take, but if need arises, right? Okay, so I have given all the questions. So next week we'll do all the questions, answers. I will discuss the answers, right? You can put down, and to get the maximum benefit of that, it is your duty to go through to 1 to 4 and try to answer this question, at least point 4. Then when I explain the answer, you see this correct or wrong, right? And then after that, you don't want to remember, study again that my part. You can forget. Take the handouts. And that is enough for your exam, right? Okay, we'll see you on next Saturday, uh, uh, to discuss the question and answer. Clear? Right. I hope you need to go through your notes. Shoot 1 to 4. Just go back there and so we'll see the question and answers next time, right? But I need your support as well, right? Please, I need your active participation. Thank you.